In this video, I'm going to be going over 5 textbook inversions. Okay, this is going to be a part 2 of a series I'm doing, and I'm going to be explaining why they're all textbook. All right, if you want to watch my live streams, I literally call these inversions in live time every single day. Just click the link in the description, the WAP link, and you'll be on your way to that. And then I did just drop a course that goes over how I'm finding these iFVGs. Okay, I'm very good at them. I point them all out in live time. So the course is currently $239. Okay, cheaper than a lot of the other ones I found. So, and that's just going to be in the WAP link as well. So make sure to check that out. I've gotten a lot of great feedback on it so far, but it's obviously up to you because I still do videos for free. Again, it's just a little more structured, a little more organized. That's the only thing you need to know when it comes to an iFVG. And then make sure to click the Apex link in the top. Use code DODGY, as you guys can see here in the top. And yeah, get yourself an account. Really good practice. We got CPI coming tomorrow, and yeah, no spread, almost no spread on those accounts. A lot of people keep asking me, what's a broker with no spread? Just use Apex. Trust me. All right. So in today's video, again, we're going to be going over 5 textbook inversions and why they're textbook. All right, so the first one was from today. Okay, I'm going to start with today, and I did alert this in live time. So here we had a bunch of engineered highs, okay, and what ended up happening was we swept this low right here, okay, and then we delivered from a fair value gap at the same time. So because of how quick this was, 1, 2, 3, right back up, and inversing this fair value gap, I figured, okay, this would be a good inversion to take, especially with engineered highs above, and on the 5-minute time frame. Okay, we'd equal highs here as well. Okay, and I don't put a lot of weight on the equal highs right next to each other. However, the momentum was obviously bullish here. We had a change in state of delivery down here. So it was a buy model, obviously. And remember, I don't know if it's the buy model or not. I'm playing what I see, and it happens to be a buy model. Okay, so you don't go in the market saying, oh, where's the buy model? Okay, I'm looking for liquidity pools. So this was your first textbook one because delivery from fair value gap, engineered highs here and equal highs here, and this would have been the take profit. Okay. The second textbook inversion was right here. Now you're probably wondering, there's 2 here. Okay. Well, that means go in the 2-minute or go in the 3-minute, wherever it turns into 1, and use that. So in the 2-minute, it turns into 1. Right, and the reason why this was good is because we swept the low of day here. We got barely any displacement under it. And you can see the candle strongly closed above, a lot of momentum. We swept right away. And yeah, that was the second textbook inversion. So again, my entry would have been the close, stop loss, a close beneath. And then I would have targeted probably high of day. I probably wouldn't have targeted that high if it was me, but high of day is what I would have targeted. Okay. And this would have been your first scale. This would have been your first take profit right here. Okay. So that was the second play. Third one did actually not provide an entry. Third one is right here. All right. Now, the reason why this is good is because it's a singular fair value gap already on the 2-minute time frame. We got an order block inside of it. Okay, so this is our CISD when we close beneath it. We had a guaranteed target, which was these equal lows. Obviously not guaranteed, but extremely high probability. And we had a sell side from before that we came close to, but didn't hit before, which usually means we're going to go back. Okay, so this was your third textbook inversion. And we barely swept these highs with a lot of displacement. Okay, and this was a fair value gap we were rejecting at the top. And you can see the bodies respected it. So for all those reasons, this was a good short. However, you didn't really get an entry here because we hit the low first and then we went down. The entry would have been for my order block traders would have been here because this was an order block. Okay, we made a green candle between these 2 red candles, up close candle, then we closed below it. All right, so that was your order block. However, with my model, this would have been an inversion model. I would have waited, and it didn't give us an entry because we hit the lows before going back here. Okay. The fourth textbook one was during London, so it was right here. Now, what's wrong with this? There's too many fair value gaps. So you gotta go to the higher time frame. Okay, this one was good because you can clearly see singular fair value gap, There's a strong sweep here, very fast sweep. We're delivering from this fair value gap. You can see this is more of a hindsight thing where, okay, the bodies are respecting this fair value gap. Okay. And then we get a close above without technically purging this high. Okay. We made equal highs and we get a close above. So your entry would have been there. Okay. And your target would have been, I mean, this looks pretty obvious to me. So I would have targeted here. You could have targeted higher if you wanted. Again, you could have targeted here. It just depends on if you're how heavy your size or whatever. Okay, but there was equal highs here as well. You could have targeted these, and this was an ITH inside of a fair value gap as well. So this candle right here was an ITH inside of a BPR, so that would have been another good target. And then obviously the high of yesterday. So lunch highs, by the way, which is time-based liquidity. So that was the fourth one. Okay. All right, because the singular fair value gap, very fast sweep. The fifth one, okay, fifth one was right here. And you probably don't see it at first, but I need to go on the 5 and show you. This was from A's session last night. Okay. Okay, A's session from last night. Delivering from a obvious fair value gap here, which at the same time, the body very algorithmically held this fair value gap to the left. We also swept liquidity at the same time. We swept these little engineered lows. Okay, so that's your liquidity sweep. And it was a singular fair value gap here. And then we got the singular fair value gap, the singular bearish fair value gap, which we closed above right here. You'd have entered in the close. Stop loss below, a close below. And you would have, again, you would have probably targeted high day or these equal highs. Now, in this situation, you would have probably taken most off here because this is your next intermediate term high inside the fair value gap. Okay, so we hit there. And you can see what you would have scaled half or 75%, whatever it was, and then you would have gone stop the break even. So those are the 5 textbook plays from the past day that I've seen. Okay, very, very textbook. All these are A+ setups. And again, this is not hindsight. I'm calling out a lot of these. Obviously, I'm not awake for these, or this one I'm not calling out because it's Asia, but it's still good to recognize the signature and price that I'm calling out. Okay, so that was it for today. Let me know if you guys have any questions. Don't forget to use that code Dodgy for a discount at Apex and buy and check out my course that I made. It's a very good course, and that's all I got for today. See you guys later. Peace.